Hey everybody, thanks for joining us for the third quarter market update here in Austin, Texas's real estate market. By the way, this is our video version, which is kind of more of a condensed version. If you want a lot more details, statistics, and even embedded articles, please look at the article right below this video. So to dive in, the third quarter has been a pretty strong quarter, acted pretty much like the second quarter of this year, which is about what I expected. Prices are up a few percent in this quarter, bringing our year-to-date to about 6% for the year so far. Your tier one homes, the homes that are truly priced right, no major flaws, and really have that wow factor, selling in day one or so, multiple offers, and selling at about a 3 to 7% premium. Your tier two, maybe it's got a lot of those factors like a tier one does, but maybe there is a flaw or two. Maybe it's on a busy road or such. And so those homes are actually sitting on the market about 30 to 45 days, having to go through a price drop or two, and conversely actually having to give up about 3 to 5% in negotiability. So pretty big swing between those two. And then your tier three, your homes that really need a lot of work or have some major flaws, those are pretty much acting the same as before, 90 days on the market, lots of negotiability. Supply currently is at 2.8 months, let's call it 3 months. Won't go into the full definition. You can look at some of our past updates for the full definition, but in essence, at a 6-month supply, we're considered an equilibrium market where you're going to see about 4 to 6% appreciation on your home. So obviously if you're below 6 months, that means you're going to get, that means demand is higher than what would be a normal market, and therefore your appreciation is going to be even better than that 4 to 6%. So 3 months is a great spot to be. 0 to 500 specifically, we're at 2 months supply, and we're probably going to end up seeing, and I would say to this point, we've seen about 7% appreciation, and I think we're going to end up being about 8 to 9% there. Between 500 and a million, a little bit higher supply, but still right on the cusp. It's at a 5-month supply, so it's still just below the equilibrium market. So far, we've seen about 6% there this year and in this third quarter. Million to 2 million, interestingly enough, jumps to about 9 months, which is about what it was last quarter. Will end up being about 4 to 5% so far year to date there. Which is actually down a little bit than what I had predicted before. And then, lo and behold, once you get above 2 million, 2 million, 3 million, 4 million, your really premium properties, what we're actually seeing is that sub-market is definitely undersupplied, especially if it's really nice product or new construction, and we'll actually see better appreciation, or we've seen better appreciation so far in the third quarter and year to date there than million to 2 million. So what's driving all this, or what's creating the current market we have? Our main significant factors, number one, job growth. We're going to do 40,000 jobs this year is what it looks like we're going to end up at. That is a really strong job growth rate. That's 3 to 5% job growth rate, 4 to 5% actually, which is definitely top 5 in the country. That brings in a lot of demand in the market. Tied to that, the tech market and the tech sector is really driving a lot of it. We were penned a number 2 city by Inc. magazine for the best startup cities, as well as number 1 fintech city for innovation by FDI, both very respected publications. So you can imagine again what that does to our employment market here. And then tied to all that, unemployment's only at 2.7%. Again, that's extremely low. That creates a lot of confidence in the market. So people are out there buying or selling and buying their next place. Interest rates are really low. That's also helping. And then finally, lifestyle. Our lifestyle component's really having a major impact on our market nowadays. We are the fastest growing metro population from a lifestyle view per Wallet Hub. Wallet Hub also has us top 10 foodie city just a few months ago. And then tied to all of that, we have the highest percentage of creative class population in the country at about 48% per city lab. So when you've got those kind of components, even if your job market wasn't doing great, well, that also drives the market. So those are significant factors. What I see looking ahead, fourth quarter, I see it busy in what I would call the tier one property and certain price bands, but then not in others. So I think ultimately we're going to end the year at about 7 to 8% if you take all the price bands. But your tier one properties are going to sell really quick. Just like I was saying earlier, we're going to see the same kind of performance in the fourth quarter there. However, tier two and tier three, I think, are going to slow down. So I think there's going to be some opportunity buys in those homes that maybe aren't that wow property. And there's definitely, I think, going to be some opportunity buys there. Let's see, what else? Up to 1.3 million if you're in central. And then again, 2 million and above. I think that it's going to stay very busy in the fourth quarter. And then once you go one tier out, let's say the Domain, Circle C, areas like that that are not considered the suburbs but not considered central, I think you're going to see a busy fourth quarter up to about 1 million, and then slow after that. And finally, in the suburbs, up to about 700,000, I think it's going to stay still pretty busy. But after that, it's going to definitely fall off in terms of activity. So that's it. Thanks for joining us. Go to our website, www.tarekmorshed.com, for past market updates, as well as tons of articles that we're posting regularly, as well as follow us on social media, Instagram, LinkedIn, and Facebook. We're also posting stuff there weekly. Thanks for joining us. We'll see you next time.